In this video, I'm going to talk about the IRS form W-4 for 2019 married filing jointly with kids. Now we're going to fill it out with the paper version using the online version because the new online estimator is the most accurate way of filling out the W-4. We're going to be able to fill it out for both spouses to help you split up that child tax credit so you're making sure that you're paying the least in taxes throughout the course of the year. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So you're going to want to stay through the whole walkthrough because I'm going to point out a couple of areas that you might make a mistake and end up paying too much in taxes throughout the course of the year. So you're going to want to stay through to the end to get the results to put on the W-4. Now I'm going to go ahead and pull it up on the screen so you can follow through, and I'll put all the links in the description at the bottom. So you can either Google it or click on the link in the description at the bottom. But if I type in IRS W-4, push a space in there, W-4, you'll see that it comes right up, but that first link was the PDF and we want the online version. So scroll right down, you'll see the IRS tax withholding estimator. It used to be called the calculator, but now it's called the estimator. So click on that button right there, tax withholding estimator, and scroll down. So for this walkthrough, we're going to do married filing jointly. If you are another filing status, I've done a ton of other videos. So this one's just going to be for married filing jointly with kids. So let's scroll down. Can someone else claim you as a dependent on their tax return? So the answer is going to be no, because you are going to also have dependents. And dependents, do you plan to claim your dependents on this tax return? Let's click off yes. Now we want to choose the amount of kids that we have. So I'm going to start with one, and I'll show you the variations as we move forward. So if you have more than one kid, what that's going to look like. And do you have income? Yes. Do you have a job? So for this walkthrough, both spouses are going to have jobs. So I'll check off one for each. If you have multiple jobs, go ahead and click that off too. So if it's two, if you have two jobs and your spouse has one, go ahead and make that adjustment. But I'm going to stick to one for this walkthrough. And if you do have multiple jobs, if each spouse has multiple jobs, the nice thing about this calculator, it'll break it down for each job that you have and tell you exactly what to put on the paper version of the W-4. So let's scroll down. Pension, I'm going to say no for this pension, but if you do have pension income, click off yes. And any of these other sources of income, now these are income sources that you're receiving, not if you're saving into a 401k or a Roth IRA or any of these areas. Of course, we're all paying into Social Security, but if you're receiving any of these are the boxes that you want to check off because that's going to be income. Now the demographic section at the very bottom, if either you or your spouse are over the age of 65 or 65 or older, or either one of you are legally blind, check those boxes off to make sure you're getting those credits. And the next section is going to be for income and withholdings. So this is going to be your income. So we're going to check off yes. Do we expect to hold this job all year? If you don't, if let's say you started this job in February or March or April or whatever, then you can click off no and choose the dates of that job. But for this walkthrough, I'm just going to choose yes. And we are going to say that we're going to get paid every 2 weeks. So if you're wondering what these mean, weekly is 52 paychecks a year. Every 2 weeks is something like every other Friday. And that's going to be 26 pay periods for the year. And twice a month is going to be something along the lines of you get paid on the 1st and the 15th. And that's going to be twice a month, which is 24 pay periods. So slight difference in those two pay periods. And then once a month is 12 pay periods a year. So I'm going to choose twice a month for this walkthrough. But of course, choose whatever you do. If you're unsure about that, ask your employer. They'll be able to tell you, or just look at your pay stubs. On what date was your most recent pay period? So you're going to need your pay stubs for this. And you need the most recent ones to get the information correct. And I'm just going to go through this, put whatever date you have on your pay stub or the last pay stub that you have, and making sure it's actually the one that you got paid on, not just a pay stub, because then it won't be as accurate as possible. And this is the information it's going to need off that pay stub. Enter the total wages you expect to receive this year. So that is going to be what you're going to receive for in this walkthrough for 2019. Now, a point that you should know is if you started at any point besides January 1st, and let's say your job was for $50,000, but you started halfway through the year, well, you're not going to earn that $50,000 in 2019. You're just going to earn that on a 12-month basis. So for that, you would put half of that would be $25,000. So you have to do a little math or a little bit of an adjustment if you're not going to receive all of this pay in 2019. So again, this is only for 2019 or this year, this taxable year. So let's just say that we're going to earn $50,000 and we're not going to get any bonuses. If you get bonuses, put them in there. And year to date, let's say that we withheld $7,000. And this could be very different from your withholdings. So you want to put whatever yours is, because this calculator is going to take this information, what you've already withheld, and help you adjust your W-4 to make sure that it's as accurate as possible. And also you want to put from the last paycheck. So I'm just going to put a number in here. These are just arbitrary numbers. I don't have any paychecks that we're working off of. And then the next section is, did you or will you contribute to a tax-deferred retirement plan such as a 401k? So that's anything pre-tax is really what it's talking about. It should say that. But when you click on that little question mark, it'll give you a little bit more information on the different retirement plans that you might have. And any of these are the pre-tax. So for example, like a Roth IRA, you can see right there, it points it out. I'll zoom in, but not a Roth plan because that is after tax. So this is trying to make the adjustment. So for example, let's say we put $10,000 into that 401k, then that $50,000 we made, only $40,000 is taxable because $50,000 is our gross income. We put $10,000 into the 401k, leaving $40,000 left as taxable income. For this walkthrough, I'm just going to choose no. Did you or will you contribute to an HSA, FSA, or pre-tax child care credit? Now, this is basically the same thing as the retirement planning above, where it's pre-tax. These are pre-tax dollars. That's why it's asking it. And I'm going to choose no. But if you have one of those plans, put the amount that you're going to contribute into those plans. Now, your spouse's job, same exact thing. So for this walkthrough, I'm going to say yes for the whole year, and then we're going to do twice a month, and I will put the same date because this is just an example. And then for my spouse, I'll put my spouse as making $85,000 a year. And then for 0 for bonuses. Scroll down a little bit more. And then the same thing here, we're going to look at the federal income taxes already withheld. So I'm just going to throw a number in there. Let's say that was $7,500. And the last paycheck was $600. No, no. Again, if it's different, just go ahead and make those adjustments and choose yes for each one of those. Now for the adjustments to your income, C adjustments. Now, I'm not going to go through all of these or any of these adjustments actually, because I want to make this as quick as possible, but I'll do videos on each one of these areas. If you have a question about any of these adjustments, whether or not you qualify or anything about these adjustments, go ahead and put them in the comments down below, and I could do that on future videos. So for example, if you have student loan interest, you can do up to $2,500. Just go ahead and check off that. You can get a little bit more information if you click on IRS topic 456. And then just scroll down to the bottom. If you're paying alimony right there, paying alimony, then that will also make the adjustment. So this is basically going to adjust or reduce your taxable income if you have any of those. The deduction. So the standard deduction for married filing jointly for 2019, you can see it right there. It's $24,400. What that means is your combined income is going to be reduced by $24,400. And then that is what's taxable income. Now it can go even further if you have retirement plans or any of those adjustments that we just went over. It's also going to reduce that total income. But if you don't have itemized deductions that are greater than $24,400, you're just going to take the standard deduction. So I'm going to click off standard deduction, and we're going to go to the next section. Now this is actually a really important section for married filing jointly with kids because we want to make sure that we're getting that child tax credit. Now, for a second, I'm going to show you what that looks like. I'm going to skip this section and we're going to come back to it, but for this walkthrough, it is the most important part. So I'm going to say for just a minute that we're going to get the results without any tax credits, and we're going to go to the next section. Now, our anticipated, you can see the results right here. Our anticipated tax obligation is $15,549, but our expected tax withholding is $16,200. That means we're withholding too much money at this point. Now, the really important number is that anticipated tax obligation of $15,549. Now, if I go back to the very, very beginning of income and withholdings, about you, and we scroll down and we adjust this back to no dependents, where did it go? And we say, no, we don't have kids. And we go to the very end, the results page. You can see that it says $16,049. Go back to the About Us. And we say that we do have kids. And we choose one. And I go back to the results page again. It only dropped by $500. So it went from $16,049 down to $15,549, which is the credit for a dependent. But we want to make sure this dependent is qualified as a child. So that's why you have to go to the tax credits section and see tax credits, scroll down, and then you're going to go to the child and dependent related section, and you're going to choose one child because they're under the age of 17. Now, if your child is 17 or older, then they're only a dependent and they only qualify for the $500 tax credit versus the $2,000. So it's 4 times more valuable from a tax perspective to have somebody under the age of 17. So 16 and younger qualifies for the $2,000 tax credit. And if we enter it in there and then go back to the results page, you're going to see that our anticipated tax obligation dropped to $14,000. So without the tax credit, without any dependent or child tax credit, it would have been $16,049, but now it dropped by $2,000 for one child. Now, if we go back to the very beginning for a minute, again, and we choose 2 children, how many dependents? Let's say we have 2 dependents, and we go back to the tax section, and now that drop down will have a 2 there for us. Before it only had a 0 and a 1. Now it has 2. And then if we go to the results page, you can see it dropped another $2,000. So this is going to help you understand your taxes a little better as well, because that's what it really is all about, estimating your total tax liability. Now, if we scroll down, so I stuck it at two kids. If we scroll down, you have a choice. You can either go get my balance close to 0 or get a refund. If we click on the get a refund, it's going to tell you exactly how to break it down. And that's what's so important about this is the first job, it says right there, your first job, your annual pre-tax is $50,000, kind of gives you a summary. And then it says on line 5, enter 10. Now that might sound like a crazy number because if you're going through the paper worksheet, then you're not going to get these high numbers just by going through it. Well, you might based on the income because 2 kids is going to be 4. So you might get this number, but if you're doing this towards the end of the year, your number might be way different than what you would get going through the paper version. That's because it's also taken into consideration what you've already held on your other paychecks. So this is helping you make that adjustment. That's why I like the online estimator so much more than going through that paper version. And it's going to split it up for you. And it's going to give for the second spouse, it's going to tell you on line 5, enter 18, and on line 6, enter 0. Now, line 5 is really the important number in this whole worksheet because that's the allowances. If you needed additional withholdings, that's what line 6 is all about. The only way you're going to have additional withholdings on line 6 is if line 5 is 0, because that's as far as it goes down, meaning the maximum amount is going to come out of your paycheck based on allowances. But if it needs to do additional withholdings, that's what line 6 is for. On line 7 is for exempt. So you're only going to put exempt if it explicitly tells you to write the word exempt. Otherwise, you're just going to leave it blank, or you could just put a line through that box and your employer is not going to enter in anything for line 7. Now, if you had something on line 5 and 6 and then wrote the word exempt, there would be some sort of a discrepancy there. So your employer probably ask you what's going on. Are you exempt or do you have allowances? So there are 2 separate parts. So if you are exempt, then you're not going to have anything on lines 5 or 6. Now, if you need your own copy of the W-4, there's a link right down there. It says download blank W-4 form. You can download it there, print out. You only need to print out this paper version right here. And then you can go right back to the online version and see the summary. This page I would keep for your records. And at the very bottom, there's a little print button. And I would just save it to a PDF or just print it out and keep it for your records. Just so you know what you put. If there is an issue or if you made a mistake, you know where it's coming from, rather than just looking at the paper version of the W-4 or asking your employer how many allowances you elected previously. But that is the easiest way to split up these allowances. And if you go back, you can mess around with it. If you want to see what it would look like if you put in money into a 401k, or if you are expecting a kid and say maybe we're expecting 3, maybe there's another kid on the way, you want to see what that's going to look like for next year, you could scroll down and you can see how it makes that adjustment. Now, if you notice, I just went through that and added 3, and then it brought it back to 14,000. Then that is because we have to go back to that child credit section, and actually put in the 3 there, and then go back to the results. And you can see it drops it all the way because each child is worth, as far as the tax credit goes, $2,000. So that's 16 and younger for that $2,000 tax credit. And of course, if you have the other credits too, you're going to want to look at those. And if you want to know more information on these credits, I'll put a link in the description at the bottom, but look at this page on the IRS website, because this is going to give you a little bit more information on the individual tax credits that you might qualify for. So the child care credit, the child tax credit, and possibly even the retirement savers credit, depending on where your income's at, you might qualify for to save additional money in taxes by saving into your 401k or another retirement plan. It's kind of like a subsidy, which is kind of nice, meaning the government is incentivizing you in order to save for your retirement. But that's only if you qualify for the retirement savers credit. And that is it. That's all you need to do. That is the easiest way to fill out the IRS form W-4 with kids. Actually, any way that you want to look at it, this is the easiest way. If you have questions, leave them in the comments down below. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.